Hey.
Hey guys, we're here in New York City doing a video on SPYI. I've been getting a ton of comments from my subscribers about it, so I'm going to compare SPYI to JEPI, and I'll show you how I incorporate the two into my portfolio. We earn over 100,000 per year in dividends at this channel, as you know, and we're living financially free, traveling the world, and you can do it too. So stick around to the end of the video and I'll share with you how I incorporate the two. Also, please leave comments in the section below and you tell me which fund is better, SPYI or JEPI.
Both.
Both? Okay, we'll see. You tell me. So we're in the account and you see that we earn over 100,000 per year in dividends. But also if you look at our performance and value, you'll see that we're up 24% for the year. The Dow's up 1, the SP is up 11, and the Nasdaq's up 26%. How are we getting this performance and almost catching up to the Nasdaq? Because we're buying funds that move upward, left to right on their charts, such as an SPYI, even a JEPI that moves up some, but SPYI moves up even more. The other place we're getting our performance from is Cornerstone. As you can see here, we have 20% gains in these drip lots, 24%, 20%, 23%, because 654, look at the price page, 654, 671, 649, these are the NAV prices. So each month, the dividend is dripped at NAV, not the market price of 8. So you get instant gains in Cornerstone each month from those drip dividends. You get instant gains from the drip dividends. You recompound your dividends at 21%, and you get days gains here of 1% and 1%. So when the market moves up, it tracks the market. CLM tracks the S&P, CRF tracks the Nasdaq. But you have to play these funds properly. They crash after their rights offering. So you have to know how to play the rights offering, which comes around this time of year, spring to summertime. So if you need help playing the rights offering, email me at aikentod48@gmail.com. I have e-guides on how to play Cornerstone. I also have e-guides on how to use margin and live financially free in a brokerage account. I use this much margin here, $260,000, just a portion of my purchasing power, because for every $1 you put in your account, you get $4 in any brokerage account. It just depends on what their requirements are. So I use a fraction of that margin to get a little bit of more income on top of my dividends, and that's how I'm living financially free. If you have a job and you use dividends, that's how you get ahead. But if you need to get further ahead and take pressure off of your job and beat the cost of living due to inflation and exorbitant bills, then you can use a little bit of margin, and I buy these funds that have a higher yield than the interest I'm charged on my margin. So that's how I'm able to get ahead. And also, the e-guides are $50 per guide, and I charge $100 for all 4, and that's where you get my phone number as well if you buy all 4. However, due to high demand for my e-guides right now, I'm going to have to start raising prices, especially when the rights offering comes for Cornerstone. There are a lot of people who have already expressed interest in my e-guides, and they're going to need my help around that time. So when that time comes, when the rights offering comes, I'm going to up my prices to $100 for each guide, and then probably $275 or $300. We'll figure out the total price at that time, depending on demand. But I'm going to be upping my prices on all my e-guides when the rights offering comes for Cornerstone. So now is your time to secure those e-guides and get my number. And if you want me to help walk you through Cornerstone or how to live financially free through your margin account, email me now for those e-guides. So back to SPYI. The reason why I'm buying it is because, like I said, it moves upward, left, to right on the chart. If we go into a snapshot of SPY, we'll see that, yes, it's starting to move and catch up to the S&P. I'm clicking on RYLD here just so I can get an accurate, I'm trying to get in through the snapshot here. Okay, so SPYI, okay, we click go here, and you'll see that it's actually moving. You know, look at it on a chart. It's moving upward, left to right there. So, and it has 12% dividend. The only negative that I can find on this fund is that A, it has a higher expense ratio than JEPI, and B, it's managed by fund managers that don't have a good track record. These are the same fund managers that managed NUSI, and that was a disaster fund. So you need to be aware of these fund managers. They're not the best, but maybe this is their moment of repentance, and they're going to start improving their performance from here. It's also thinly traded, but that's normal for new funds. Just like YieldMax, the shares are thinly traded. So, you know, that's something to be aware of for SPYI. Again, what this fund does is they buy all 500 S&P 500 companies, unlike a JEPI who just buys about 100 of them. and they take the dividends from all 500 companies and then they sell calls to generate extra premiums, kind of like an XYLD, except they'll use the extra money from those sold calls to sometimes buy out of the money calls. And that's where they get their upside participation. So it's an interesting fund. I'm going to buy some, but why am I only buying 1,000 of it? Because it has 50% maintenance. If we go into my order screen, you'll see that I have an order placed right now. It's going to be, executed on Monday for SPYI. You also see I have PXE down there, Pioneer, because the dividend is high and energy is cheap, and OPEC is seeming like they're not going to do too many hikes. They're not going to raise their output too much. We just got an alert on that. I think someone even might have done cuts recently. Saudi Arabia, I'm not sure. Let's see, we have oil prices pop 2.5% after Saudi Arabia pledges more voluntary production cuts. So that's why I have PXD in there. So anyway, buying 20 of SPYI, I just wanted to show you that it has 50% maintenance. So let me get to a better screen for you here. We go to trading and we go to stocks, and I'm going to show you that SPYI is 50% maintenance, kind of like XYLD. That's why I don't have XYLD in my account. I love XYLD. I love anything S&P 500. It's indexed. But unfortunately, it is 50% maintenance like SPYI. See, 50% maintenance. That means for every $1,000 I put in SPYI, $500 of my equity is taken up. If you're not running margin, then that's not a problem. But for me, since I'm running margin, I have to have every bit of equity I can get, because I don't want to just live financially free on dividends, but living on the edge, avoiding margin calls every day. I don't want to be losing my hair. I want to keep this cushion here high. So my available for withdrawal, 121.7. I just bought 1,000 SPYI. So that went from 122.5 roughly or something to 121.7. So I was at 122. Now I'm at 121.7 again, because the equity maintenance is so high for SPYI that I just can't afford to buy too much of it. So even though you have all this purchasing power, it sucks up your purchasing power when the maintenance is high. So again, if you need help with maintenance and how to use margin, email me again for my e-guides at aikentodd48@gmail.com. I'm sorry. So I think that'll do it for the video. I'm buying SPYI. I like it. I like JEPI more than SPYI right now, because JEPI has a lower maintenance, and that's key for my channel. And also the fund managers for JEPI are a lot higher quality than the fund managers for SPYI at NEOS. So I'm going to take a flyer on SPYI, and I'm going to buy 1,000, just like I did with YOMAX. I'm going to start small, wait in small, and see how the fund performs. We already have enough upward, left, or right moving names in the portfolio to get us that performance that we need, again, through Cornerstone and all the funds we mentioned in our past videos. So I think I'll leave it here. If you like the video, please click like or subscribe, of course, and also leave comments in the section below. Please tell me what you think about SPYI. Is it better than JEPI, or should you just hold JEPI like you've been doing and concentrate most of your money in that, since it's a lower maintenance fund and it has higher quality fund managers? So you tell me. I hope you enjoy this video. You got to meet my son today. I hope you found that entertaining, and I'll talk to you soon. Thanks.